right, so AVID Investors, I'm Stacy McBain with Swope Investment Properties. And what's the market doing here locally? In a nutshell, I'm going to tell you. As we predicted last month, the market is speeding up. Buyers are active and getting more and more aggressive, particularly on reasonably priced homes, to the point that some multiple offer situations, escalation clauses, and things like that are resurfacing. If you're selling, aim for the sweet spot. Buyers are indeed price sensitive with these interest rates, which are here to stay. Nobody wants to overpay. But if you're priced reasonably and fair, you have a high likelihood of attracting a good buyer, if not multiple buyers. If they do have multiple offers, don't expect it to be crazy, maybe closer to 20,000 over asking sometimes, even when there's a few. There was one with 50,000 over asking. And as all of this hype suggests, inventory seems to be lacking. So that's what's going on in the market right now. Let us know if you need help navigating it. Here's what it looks like in data. Dave Rusk from Idaho Central Credit Union says that the best indicator is the 10-year Treasury yield. And if we look at what's been going on in the past year, we're right about in the middle of it. As you see, there's been ups, there's been downs, and we're just kind of right in the center of where it's all been floating around. Rates are below 7%, which we like to see. Of course, that's not the numbers of the year 2000s that we were seeing. And it's been pretty level for the month of March, Dave says. Decent improvement since February, back down under 7 for investment properties. And I guess there's another rate announcement coming soon, so we'll see what changes with that. But noteworthy, his business in February and March is up 3 times what it was last year. Remember, the lenders, you got to call a lender in order to buy a home. So they're going to kind of be the first line. They're going to see the tidal wave come in before we do. I don't yet know if it's a tidal wave, but we know that it looks a little bit more more flowing than it did last year at this time. And so, yeah, your rates are kind of in the 6s, depending on how you do it. And ARM loans will save you some money if you do that. High down payments will save you some money if you're able to put more down on an investment property. 40%, that gets you down to, oh yeah, you can just swap those little numbers there. That gets you down to 6.25% instead of 6.99 with 20% down. And at this market, it takes about 40% to break even or have some small cash flow anyway. So go for it if you can.
I paid 18% my first.
1988.
Oh, I got 40 years old.
In the 80s though, right? Yeah. 18%. So in other words, we got nothing to complain about. So suck it up with the 7%. Do what you're going to do. It's sometimes good just to get into the market and you know, be in the market. It's a great real estate, as we were talking, is a great hedge against inflation as well. So in single family homes, what we have going on right now is everything's up, whether it's prices, inventory. Well, no, not inventory. Prices, homes sold, and days on market are up. But inventory is down both year over year, it's all up, but then month over month, inventory is down. So most things are up, inventory is down, and that's in Ada. Oh, where did Canyon County go? Canyon County was very similar, but different. But I guess we're just going to have to talk about Canyon County next month. Because instead I got all excited about United Van Lines, because where is the population moving? They all already moved here if they were going to, according to this report. Well, that's not a direct quote. What we do see is a lot of people moving to the southeast. So dark blue, the darker the blue, the more in-migration it's experiencing. And if it's yellow, the darker the yellow, that means more people are moving out. So you see, we're light blue now, and the dark blue is a Sun Belt, and Oregon in the Sun Belt. So why are people moving? They're seeking economic relief without sacrificing quality of life, and they seem to be moving toward less dense, more affordable region, such as South Carolina, Alabama, Arkansas. And so they're fleeing urban centers where the costs are rising, and United Van Lines reports the opportunities are shrinking. But what about Idaho? So when we zoom on into Idaho here, we see that the primary reason for moving into Idaho is family. And that's also the primary reason for moving out. So people mostly are moving around to be near the people they love, which makes sense. Good priorities, people. Next is job. And we have more people moving out for jobs than for in, but we do have a lot of people moving in for jobs. We have more people moving in for cost, but some people are moving out for cost. And then health, well, we're like 49th or something in doctors per capita, or maybe even 50. So they're not moving here for health purposes, that's for sure. But they are moving here for retirement. We have a lot of people moving to Idaho for retirement. And overall people appreciate quality of life. Who's moving? How old are they? Inbound, well, here it is in numbers. You can see that we have our greatest amount of people are those retirees, 65 or older. That's our highest population of inbound folks. So my mom moved to be here after I moved here, and I know other folks that my best friend's dad moved here after she moved here. Her husband was here originally. Outbound, again, that's our big population. So the seniors are moving around more than anyone else right now. They also they can afford to. Yes, Carlene.
Last week that the people that are coming into Idaho are from Washington, not California.
We've seen a lot of Washington folks moving in. I think California already moved here. If you were going to move to Idaho, you did it like yesterday. And so, but Washington's still coming. They didn't, yeah.
The last time we had those California fires, we saw them coming. So I don't know if they're just delayed or.
Well, we looked at that last month and it took about 8 weeks, I think we saw that to move here, but yeah, maybe we'll find out. Because yeah. What about income? How much money do people have when they're moving here and they're moving out? In the biggest income bracket, there's more people moving in than moving out with that 150,000 or more income. But here it is in the chart. So on the lowest income bracket, more people are moving out than are moving in. Moving's expensive too. So. And we do get Canyon County after all. All right. So everything's up year over year in Canyon County. Except new build homes, they went down a little bit year over year. So there's been a little downward pressure on new build homes, I've noticed. And Canyon County has the data to show it year over year, but it's not bad, minus 2.6%. That supports those concessions we saw as well. And month over month, the median price went down a little bit in Canyon County, but seasonally speaking, things are going to ebb and flow, and we'll probably see those median prices push up as the buyers do get more frenetic. And inventory is up year over year as well. And as our days on market, but the number of homes sold year over year was down. So Drost's ADA data, Ada County fourplexes. Tony, you could probably walk us through this data a little bit.
It's all right there.
It's all right there. Okay, so the average price increased, and it's not a huge sample size, the number of fourplexes that we have in Ada County on the market right now. So one really expensive fourplex sale, which we had last month, will indeed impact the data fairly significantly because there's only 2. And that one was upscale and it included garages. And so that improves the net operating income. Days on market increased to 108 or 9 days from January because we had some fourplexes just sitting there and they were priced really high. But our gross rent multiplier has been consistent, and our cap rate in terms of the 6-month trailing average, which gives a better longer term picture, has also been fairly stable. So in pictures, you can see a snapshot of the cap rate, 6 months trailing being fairly flatlined now. Previous Lee, and I left it here, Tony had said he likes it when it's a smooth trend line. You know, when you see things going up and up and up and up, that to us sounds unsustainable. And so now we've experienced a little bit of that after, you know, after we had a peak in 2022. And there were some signs that cap rates were going to go up a little bit, or there was going to be downward pressure on fourplexes. However, there are some data points that are showing us also the opposite. We talked about the expensive one on Charm, which is by the Lucky Lane, or maybe it was on Fortune, I don't know. But in any event, it was trying to sell back at 930,000 for a fourplex, and it finally sold. Now someone else was like, well, sweet, maybe I can get $1 million. And they have another one in that community that's listed now for 999,000. Well, we thought 930 wasn't going to sell. But sure enough, we called it, and it was a 1031 cash buyer who bought it. So here's what your trend line looks like in prices. Our average price has not changed drastically, but this past month it pushed up a bit.
The 999 sold.
No, it just came on the market.
Oh, really?
So they kind of timed it. They saw the two in that same neighborhood go.
Oh,
Even though they took over 6 months to get it. They saw it and then they went bigger.
so it hasn't sold.
No, the cap.
It
rate
can be yours.
Like, the cap rate was sub 4, like maybe closer to down. 3.2, 3.4, something like that.
So there's the days on market in pictures. Yeah. Right? But I don't think if you don't price it at $1 million when it's only worth 900, 850, then that number will go down a little bit. So, and this is a snapshot of what's active now. So as you see, we have that 4823 Charm line item number 2 there, currently listed at 999,999. So we've got a bunch of stuff listed in the almost $1 million range. I know, right? That's what I said. Yeah. So everything up there is.
You'll laugh, you'll cry, you get some money, let's goodbye.
And then here we go in Canyon County. So, so obviously these, well, Malad Street. Okay. So that's what we've got on the fourplex market. So if you're sitting on a fourplex, you might be sitting on about $1 million here coming pretty soon, but it's just the numbers necessarily aren't necessarily supporting it. So we were potentially talking about listing one in that neighborhood. West side. And you know, it'll be interesting to see if some of this stuff sells and if we can push the price and if we'll get it. But First Rate Property Management has provided vacancy and rental market data. Now, does anyone here have vacancies? Yeah, I do. I have a bit. We have it. You do. We just listed it, and we thought we listed it at a really affordable price, and I have been getting responses, but it's, you know, we're trying to rent it fairly quickly. And so it's active. It's been on the market about a week. Yes, Carlene.
Let me ask you, when you go to rent property, can you state who you want in your property? Like, I don't want anybody over 55.
No, that's a fair housing violation.
Yeah.
You can discriminate against smokers. You can ask on the application if they smoke cigarettes, and that's not a protected class. But in general, if you're trying not to break any laws that are fair housing, you don't get to focus on who is renting the property. You can focus on your criteria, and everyone has to be treated the same. If you have fewer,
Can't come in.
that would be age discrimination. Yeah. If they have less than 4 units, they are still breaking fair housing rules, but they kind of don't get targeted as much. I don't know how to say that correctly, but okay. So First Rate reports that they're seeing the market heat up with strong demand across their listings. So good news if you do have your vacancies coming up, and good for you for not having one now because it's not quite the prime season yet. Last week alone, they had 64 showings among 27 available properties. Now, they don't let any of their leases expire quite yet. They do all of their releasing in the prime season. So their 27 available properties are gonna be either lease breaks or new properties that they're taking on. First Rate is taking on new properties to manage. Did you say so? Okay. You did.
Like.
April, does it start in April for them or May?
Well, it starts warming up, but typically the rental season follows the school season. So, you know, when school's gonna break, that's when. So they start looking then, and then they look to do the move during the summer, if they're gonna move then.
When does it usually slow down? Is it like October kind of thing?
Gosh, it seems like that's getting pushed sooner. So August is starting to get difficult now. I don't know if that's because schools are starting sooner now or what, but like. You really need to get back and done, because it could struggle. Then once you get into September, well, October for sure, man, it's tough. You want to try to avoid those.
That's for rental. What about sales?
Well, the single family market kind of likes those seasonal things about the same season. Like the multifamily just kind of depends on what's out there. If there's hardly out there and you got something good, it's.
Yeah, for sales, if you're the seller, you know, if you're trying to time it, April it feels on the early side, but there's, you know, you're also not gonna have as much competition in March, April. And so right now, there's a lot of competition but yet we still don't know how spring's gonna settle in. By May, everyone starts listing, so buyers have a lot more choices. But May seems to be a pretty hot month, and June, and then sometimes people get a little hot, too hot. And it's like, they take a nap in June, they go like July, they go on vacation for July for a minute. And then it becomes like the last call to buy. So it sort of does some little micro ebbs and flows. But May's a good time if you're trying to time it perfectly, but I wouldn't say, you know, there's pros and cons months surrounding that as well.
Strategically, I like April ending leases. Because if you're the tenant and you really are considering moving schools out. April's early enough where you still have school, you don't want to move, so the chances of renewal are a little higher. Because it's just not the opportune time to go after. And we all know turnover is the biggest expense.
Early advertising has been a thing, and I experienced that with my vacancy that I forgot to put up there until I thought about it. I'm like, oh my gosh, I want someone to move in April 1st. I better get my ad up. And a lot of the folks who are looking hadn't given their 30 days notice yet, so they didn't want to move too soon. When I used to rent more stuff out, it seemed like folks had already given, like, it seemed like the people were shopping a month out, but signing 2 weeks out. And now they're waiting and not giving their notice until they found something. So what First Rate says, though, who has a much better sample size than mine, is that their proactive approach to early advertising has significantly reduced vacancy periods. So they're re-renting stuff before the previous tenants move out, and they're marketing it earlier. So I think that's the way the market's moving as well, to prevent loss of income.